So, if you're wondering what to do in a situation where we have the stock market getting very volatile, I would say that here's something that I would want you to keep in mind. If you could look back, let's say 10 years ago, and you look into the stock market and you see how the market has behaved, you see a lot of times there's often this graph that looks like, this zigzag line that keeps moving up in the right direction that we want it to go, but there's often those downswings that are occasionally popping up as you look at a trend line over years. And that's something that you need to keep in mind even for this stage or this states we are in, where the stock market is very unpredictable, and in the morning it starts out to be green, by the end of the day it turns red. Now, if you can ask yourself 10 years from now, what do you think would happen to the stock market? Do you think it's going to be where it is now? Do you think it's going to be lower, or do you think it's going to be higher? Yeah, of course, we can always have, the market corrections where we do lose 10%, 20%, or even a crash. Those can happen. And honestly speaking, as long as you are not trying to use the money that you've invested in the market tomorrow, or you're not trying to use that money 6 months from now, or maybe a year from now, maybe 2 years from now, right? In the worst case scenario, you will generally come out ahead. And as long as you don't sell. And that is something that I want you to keep in mind, that as you look at this market, as you worry about what's going on in the market, as you think about the nonsense that, one person says, and then the other person comes back at them, and they're going back and forth, no matter which side you're on. And this is not about politics. This is just about the fact that if you're investing your money and you've worked hard for your money, you want your money to yield returns. And if you get emotional about how you feel and you make decisions based on how you feel, you're likely going to do the wrong thing. The most important thing you can always do in times like this is don't even look at your portfolio if possible. Don't even care about trying to time the market and trying to jump in because you think you've gotten the bottom. There's nothing wrong in buying. I still will always encourage you to buy, and buy those good companies that that have always done well. Or if you're not sure of a company to buy, you can always buy ETFs, right? Mutual funds or index funds. You can always do those things at times like this. But one thing that you need to keep in mind is that if you think, well, you have seen the bottom and now put all your money into the market at this time, you're likely going to do it wrong or lose a lot of money, because guess what? Tomorrow comes and then the stock market falls even further. And that is likely going to continue for some time until there's a clear direction as to where we are headed, Because at the end of the day, we don't know where this is going. We don't know how this is going to play out. Definitely, I believe that every American has a good heart, all right? Has a heart of doing what's best for the country. But at the end of it all these other countries also have things that they want to do for their countries. So I believe that as investors, our goal isn't to try to figure out the best time to get in or the best time to get out, because at this point, the best thing we can do is to keep investing on a consistent basis and don't try to time the market, because the more you try to do that, the more you're likely going to hurt yourself emotionally, and you're likely going to get disappointed with the results you have. When what you can really do is to buy on a consistent basis, whether it's your $20, whether it's your $50, whether it's your $100, whether it's your $1,000 that you put in the market, consistently buy and know that, hey, this is something that I'm doing for 6 months time, or a year, or 3 years from now, or 5 years from now, or 10 years from now, maybe 20 years from now. Because the more long-term outlook you hold and have, the more you're likely to do well, because guess what? The stock market will continue to go up. Why? Because countries continue to invest, technology continues to get better, people continue to make new products, the GDP keeps growing. Unfortunately, the debt is growing too. We need to talk about that, but that's not a topic for today. But the point here is, as long as the GDP keeps expanding, more money keeps flowing into the economy, guess what? Your real estate will go up, your stock market will go up. Cryptocurrencies can be questionable depending on what you look into, what type of crypto you invest in. So I'm not going to lean a lot in that. And of course, it's okay to hold some Bitcoin and Ether and all this other Solana and all these cryptos out there, but I'm more focused on the ones that have a track record. We're talking about investing in stock market. We're talking about investing in real estate, maybe a little bit on the crypto if you can. Okay, but those two that I've just mentioned have always been there. They've existed for a long time. And if you find opportunities, especially in the stock market right now, you are likely going to do well. The reason why real estate is quite difficult right now is what? Because of the interest rate. And the value of houses are currently going lower. Why? Because nobody's buying. If nobody's buying, there's no demand, then guess what? Prices starts to come down. So unless you get a very good deal or you have a lot of cash to make a deal, then it can be hard to get into real estate at this point. But the stock market is something that, especially if you have a long-term view of the market and you know that you're looking at this 5 years from now, you are going to get really well outcomes from your investment in terms of the results you get. So don't look at this from the point of what's happening. Am I losing money? Yes, you may be in the red temporarily, and in fact, it may even drop further tomorrow, and that's okay. In my mind, let it come down more, because the more it lowers, the more it goes down, the more I can buy, the more investments I can get into, right? If I put $20 in this stock today and I invest another $20 tomorrow, guess what? Because it's lower, I'm buying more of the shares. If it falls even further next week, guess what? My $20 go further. And if it's my $50, and if it's my $100, my $1,000, if it's $2,000, whatever amount you have that you can consistently invest in, the lower it goes, right? The lower it gets, the more shares of that ETF or that stock or that company you can buy, which is good for you, because guess what? When all of this is behind us, we're going up. And when it goes up, that is where you see the value of the investments and the opportunities you've taken. And I hope that you will do this, okay? I hope that you will do this, because at the end of the day, these are the opportunities we talk about, all right? Buy low, sell high. It's as simple as that. Buy low, sell high. If you can buy it when it's low now, you're likely going to be able to sell when the prices turn around. The prices will turn around. It's the matter of time. It will turn around. It will happen, right? I'm looking at the Dow Jones index here. In the past 1 year, it made the high of about 49,000. I think if I'm correct there. No, 45,000. Okay, 45,000 points. And now it's down to 43,000. So we've lost about 2,000 from the highs. Okay, and like I said, this can even fall lower. It can still go down to about 42,000. That is easy from where it is right now. Easy. It can lose another 1,000 points. And if it does, that's even great. That's what we want. Let it come down. Let it come down so that we can buy more. As long as you have a long-term approach. As long as you have a long-term approach, let it come down. The more it comes, the lower it goes, the better for us. Because long-term, it will do better. It will do well. It has no choice. Where else would people put their money? Think about it. Where else would people put their money? You can't put your money in real estate right now, like I said. You can't put your money in savings account, otherwise inflation will eat up your money. Gold is not really an investment, it's just a store of value. So you can't pack a lot of money in gold, because hey, you can stay in cash and do things like what Warren Buffett is doing, okay? But that's a fool's game, in my opinion. Now, Warren Buffett is a smart investor, and I'm not saying that you and I, I'm not comparing myself to him. That's not the point. The point I'm trying to make is that he can choose to do that, but he's still invested in the market. That's something that you need to understand. He didn't just exit the market completely. Yes, it took some money off the table, which I believe is a smart thing, especially when you have a lot of things, situations like this going on where the market is very unpredictable. But that is because you have billions and billions of dollars to invest. So it's okay to put some money in cash and hold off until things look better. But if you are in the position where you feel like, hey, you only have, $10,000 invested or $20,000 invested, and you're now going everything in cash, guess what? The best days, you're going to miss out of it. It's best to put your money in an ETF where you are constantly investing in it and you're just riding the market up. Let the market do its thing and you don't have to worry about it. I thought I'd share my thoughts with you, and I hope that you found value in this one. Of course, let me know your thoughts in the comment section. Let me know what you think. What are you doing? Do you think it's go all cash now or to stay in the market? All right? Or do you just want to look at other investment entirely? And if whatever investment have you found that you think might be worth it at this point, let me know in your comment section.